Airbnb is now gradually heading towards disaster before our eyes. Bookings are decreasing, rules are getting stricter, hosts are struggling with costs, and guests are leaving. Nowadays, the occupancy rate nationwide is only 46%, whereas 2 years ago it was nearly 62%. New York's strict regulations wiped out 75% of listings overnight. In 2025, Airbnb dream has died. This is the reality. And no one is really saying it. I am saying it. Here are 10 reasons why the Airbnb market is collapsing, and the reality is even more terrifying than you think. The golden era of Airbnb is over. Have you ever wondered where the dream of easy money we saw in Airbnb went? The dream of passive income that everyone saw, as if everyone, even their pets, bought investment properties and listed them on Airbnb. In 2021, it seemed like an easy way to make money. But by 2025, it's all over. According to the latest AirDNA report, in Q2 2025, the occupancy rate is only 46.3%. After the post-pandemic period in 2022, it was 61.7%. This is not just a decline, it's like a landslide. Austin, Nashville, Miami, once investor hotspots, now many hosts are getting less than 30% occupancy. And even during high season, they struggle to fill bookings. What's the problem? Oversupply. Currently, there are 1.3 million short-term rental listings in the U.S., whereas in 2019, there were only 750,000. But traveler demand hasn't increased at the same rate. Rather, it has decreased. Inflation has pressured the middle class, and guests are not traveling as much as before. The biggest blow? About 40% of listings are concentrated in just 10 markets. Now, competition is extremely fierce. If your property is not luxurious, lacks special features, getting bookings is difficult. Loans, regulations, and picky guests, altogether, the golden era is over. Hosts are realizing that the passive income they imagined, it's actually a real job, with no health insurance, no paid leave, and very low cleaning fees. The mortgage time bomb. Now let's talk about a topic, adjustable rate mortgages, or ARMs, the silent destroyer of the Airbnb market in 2025. During the buying frenzy from 2020 to 2022, many hosts took 5-year ARM loans, low interest for the first few years, then a sudden increase. In 2025, those interest rates are resetting, and it's not small. According to Freddie Mac, the average rate is rising from 2.8% to over 7.3%. That means monthly payments are doubling. For example, a property worth $900,000 now requires $6,400 per month. Previously, it was $3,200. Costs are rising, bookings are falling. Hosts are now fighting not just for bookings, but to avoid default. In Sedona, Arizona, about 18% of hosts are financially troubled or in foreclosure. 1 in every 2 hosts cannot survive. Extra taxes, inspection fees, HOA pressure, altogether Airbnb's cash flow is sinking. Even if sold, property values are steadily dropping. The mortgage time bomb is not just ticking, it has already exploded. Citywide Airbnb regulatory complexities, hosts in the fire. Cities are no longer gray zones for Airbnb, but burning with regulation. In 2025, these restrictions are hitting harder than ever before. People are angry, locals are tired, and regulators are making strict decisions. You might think, this is just a big city issue. Wrong. In New York, in 2023, Local Law 18 shut down nearly 80% of short-term listings overnight. Now, Los Angeles, Chicago, Honolulu, New Orleans, Atlanta, Seattle, Dallas, all cities are enforcing strict rules. Some places have full bans, some restrict permits or enforce a 30-night minimum rule. In Los Angeles alone, over 8,000 illegal listings were canceled in the first quarter. According to Inside Airbnb, in some cities, 55% of hosts are still operating illegally, with fines of $5,000 per day if caught. Small towns are following the same path. Bozeman, Montana recently passed the law allowing short-term rentals only if the owner resides there. Result: 90% of listings shut down instantly. The main reason? Locals want permanent residents, not ghost hotels. If you have 5 properties, remember, after the next city council meeting, your business could vanish in an instant. Sky-high guest expectations, hosts failing. Today's Airbnb guests expect a 5-star hotel experience, perfect design, fast check-in, daily maid service, and Netflix login, all for $89 a night. According to Guesty's 2025 report, guest complaints have increased by 31%. Common complaints: slow Wi-Fi, unclear light switches, missing coffee pods. Hosts are ordinary people managing their jobs and properties simultaneously. If they don't respond within an hour, Airbnb punishes the listing. According to Proper Insurance, loss rates have increased by 23%. Broken hot tubs, stolen TVs, backyard fires. And when hosts file claims, in 70% of cases, Airbnb sides with the guest. The result? Hosts are breaking under pressure, and guests act like professional critics. Hosting in 2025 is not a business, it's a customer service battlefield. Small hosts trapped in the algorithm game. You log in, the dashboard is empty, no bookings. Why? The algorithm. In 2025, Airbnb updated its AI-driven search, suffocating small independent hosts. Superhosts have advantages: 100-plus 5-star reviews, optimized SEO photos, fast responses, dynamic pricing. If you don't have these, you disappear from search results. According to Host GPO, owners with fewer than 5 listings have seen visibility drop by 44%. Airbnb is now phasing out mom-and-pop hosts, giving opportunities to professional and mega hosts. Corporate hosts have teams, listing management, daily pricing, 24/7 check-in. Small hosts are lucky to get even one booking a month. And for new listings, a 15.5% host service fee makes it even harder. Airbnb is David versus Goliath, with Goliath wielding SEO, advertising, and enterprise support. Luxury Airbnb slowly collapsing. The wealthy selling properties. Many believed budget Airbnb may struggle, but luxury properties are always profitable. Yes, at one time it was true. In 2021-2022, high-end villas with $600 per night hot tubs and fire pits were extremely popular. But by 2025, this luxury market is also struggling. Picasso Q3 report shows high-end properties earning $15,000 per month saw bookings drop by 48%. The main reason? Not oversupply, but wealthy guests are traveling less. Private jets are used less, luxury retail is down, and wealthy buyers have lost a significant portion of net worth. Luxury guests expect flawless white-glove concierge service, no mistakes, on-demand hot tub repairs. If not delivered, they leave 1-star reviews, impacting search visibility even for $900 per night Malibu villas. Wealthy owners are quietly selling properties in Aspen, Palm Springs, Napa. Douglas Elliott calls this a stealth unwind, 1/3 of luxury listings selling below previous peak prices. A property that was once a cash machine is now a money pit. The wealthy have quietly exited, leaving those remaining struggling to pay the bills. The fall of Airbnb arbitrage, sublet businesses threatened. Now to the Airbnb arbitrage model, where people ran Airbnb without owning properties. If you look at the 2021-2022 TikTok crowd, everyone said, "I manage 30 properties but own none." But in 2021, that entire model has collapsed. In 2021, many people sublet properties on long-term leases for Airbnb. It worked at first, but now lease costs remain high and bookings are low. According to Mashvisor, arbitrage listing profit margins have dropped 62%, most now in negative cash flow. Owners have tightened rules. Lease clauses now almost ban subletting. 32% of multifamily units now do not allow short-term sublets due to liability, noise complaints, and lawsuits. Cities now require proof of property ownership to obtain a license. Worse news, the platforms arbitrage gurus use to build their imperium, like turnkey systems, VA booking teams, automated messaging bots, now fail under the heading of adjustable rate mortgages. One thing can be assigned to 3 agents, but none reply to the guests. The arbitrage guys who are using turnkey systems with USA-based VA booking teams now have even more problems with the automated messaging bots. As soon as A came, B didn't answer, and C only replied to the previous guest.
Algorithm, as they cannot scale and provide flawless experiences. The 2021 arbitrage crowd now struggles with $3,000 a month leases and no bookings, trying to sell setups on Reddit or Facebook groups. And those gurus still sell $2,000 courses, My 2025 STR Strategy Update, while quietly running Amazon dropshipping or vending machine businesses. Arbitrage was never sustainable. It was just a hustle bundle, and now it's destroyed. Number 3. Airbnb's misery for the middle class. Dreams shattered. Airbnb's collapse isn't just about declining bookings, it's a financial disaster for the middle class. By 2025, the dream that started as a passive income ticket is now a trap of risk. People with day jobs took second mortgages, used home equity to buy fixer-uppers, hoping for cash flow. According to Redfin Q2, about 11% of Airbnb-style properties bought between 2020-2022 are now underwater, worth less than the mortgage. Defaults on STR properties have risen 380%, according to CoreLogic. These are ordinary Instagram landlords, teachers, nurses, IT workers who thought vision boards and mid-century sofas would make them rich. Guests are gone. Debts remain. Now they're stuck with $4,000 mortgage, $200 utility bills, $900 property taxes, and empty bookings. Some are even living in Airbnb units because they cannot afford both rent and mortgage. What was supposed to be a lift to independence, Airbnb, is now just a trap door. Airbnb losing control, investors in panic. Airbnb Inc., the company that ran the whole circus, is losing control itself. In 2025, Airbnb stock has dropped 42% since the start of the year, and Wall Street is panicking. Why? Growth is zero, costs are rising, and public trust is declining. CEO Brian Chesky admitted on the Q2 earnings call that guest satisfaction is low, cancellations have increased, and North American booking velocity is down 18%. They're trying to manage the situation with loyalty programs and AI-driven pricing, but it's not working. Goldman Sachs downgraded Airbnb to sell in June, citing city regulatory risks and declining platform reliability. The fundamental problem: Airbnb owns no properties itself. It cannot ensure hotel-like service, security, or cleanliness. It's just a massive intermediary with no control, and the cracks are obvious. Customer support is overwhelmed. Hosts wait 3+ weeks for chargeback or loss claim resolutions. Guests blame hosts. Hosts get frustrated, and the platform is under pressure. Airbnb is squeezed from both sides. Guest demand has risen, hosts want out, and the platform cannot meet either demand. It is now chaos. Airbnb has expanded, but trying to bring back users has caused damage. When the king of short-term rentals loses control, it's doubtful this model was ever meant to survive. Loss of trust when the game ends. The final nail, and it's not just about occupancy, cleaning fees, arbitrage, or algorithm changes. The core issue is trust. When trust is lost, the whole game is over. In 2025, Airbnb's biggest problem is a lack of confidence in the platform. Guests don't trust hosts. Hosts don't trust guests. No one trusts Airbnb. Statistic Global Survey shows 61% of travelers no longer feel safe using Airbnb. Examples of the problem: hidden cameras, last-minute cancellations, bait-and-switch listings, unexpected host arrivals, all damaging the reputation. Hosts are terrified too. Party guests, fake ID bookings, damaged homes, false chargebacks. Airbnb almost always sides with guests, causing hosts to lock properties, increase surveillance, and create 12-page house rules to protect themselves. It's no longer hospitality, it's paranoia. Airbnb press releases claim everything is fine. We're listening, improving, investing in safety. But reality? When both sides of the market continuously complain, you have no business, only lawsuits waiting. Airbnb's core promise was safe, affordable, local experience. Now it has become fear, distrust, and frustration. When people stop believing listings are real, hosts are reliable, or the platform has their back, they leave. Result: hotels, VRBO, Booking.com win. In 2025, Airbnb is gradually fading. The question is no longer, is it cheap, but is it worth the risk? This is no ordinary market correction. It's a real-time collapse. Airbnb fantasy, passive income dreams, side hustle success stories, all over. In their place, pressure of control, oversupply, debt, lawsuits, burnout, broken trust. Result: hosts terrified, guests frustrated, the platform burning, struggling to survive. Is it time to buy property for Airbnb? No. If you already own property, perhaps it's time to pivot quickly. Share your experience in the comments. Are you seeing this crash in your area, or is it just beginning? Like and subscribe, and stay alert.